All right, everyone, welcome back for the episode of Carnivore Trades. Today is Friday, August 18th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So markets here managing to carve out, let's just call it a flat day here. Spiders up 18 cents, Q's down 47. Dow up 60 cents there on the DIA, and the Russell, big winner on the day. How much was that up there? 57 basis points. So nice little dip and flip, we call it, there on the IWM, and held that little trend line. Now, today, let's not make too much out of it. We did have some good volume here. 90 million shares, that's typically good volume. If this was anything less than an OPEX Friday, I would say there's definitely a really good chance of a tradable low being in. I'm going to say that anyway, as you guys can imagine, because if you've been watching the channel the last couple of days, kind of looking for this, and we got it here. So I believe anyway, but you have to take it with a grain of salt because it is OPEX Friday. Look what they did to a lot of these stocks. Tesla gap down, bar coding all day long. Tesla's a very popular retail stock. This is just a premium burn. This is very typical. Look what they did all day long with the spiders. Grinded it sideways, popped it up the end, and then just closed it above 436. So that looked like the max pain level there. I'm guessing 358 on the Qs. Dow 345. It's no surprise these whole round numbers. Look at Apple, right below 175. Whole round numbers, right? These things happen for a reason. It's not a coincidence. Additionally, if you look back at June, we did have good volume on the reversal. 114 million shares. Never once did you see me come on here and say there's a top in place in June based on that reversal with volume. I always said market can go higher here, it can go higher because it was an OPEX Friday. That's why I didn't think anything of it. Unless we got something to change. If we had a lower high put in, then we start looking at it. But now back here, obviously that's a different story. We've seen distribution volume multiple times, not just on the spiders, but on the triple Qs, right? So we do believe there's a top in place. We've seen the semiconductors leading sector with mega distribution volume a few weeks ago. But in any case, today, I do think there is a tradable low in place, despite it just being OPEX. Yes, we did close green. But again, we went down into this area, right? This is, what a supply zone looks like, right? That's pretty much textbook. Pivot low, pivot high. There's accumulation there. So we should get some type of a bounce. The first leg of the bear is always the weakest one. And then you get some type of a retrace. And that's the one, the kind of bigger leg. If you follow wave theory, I'm not a huge wave guy, but, I do like to understand it a little bit. And, your impulsive wave 3, essentially. So there's your 1, 2. That's the bigger leg down. So that's sort of the thought process there. That's what I'm seeing. I think for bulls, honestly, I think you want us to be down more. If you're macro bullish, meaning over the next couple of months you want new highs, I think you want us down here. You want us to go down and fill this gap on the futures next week. You want us to just grind down into next Friday. Why do I say that? Because that's the Jackson Hole Symposium. As a bull, you don't want us to bounce up here. That's going to be kind of the setup that bears are looking for. So, and that's the one I think we're getting. As you can probably tell. But right now, markets should get a bounce here. You see the futures tested the gap window at 43.48. Low of the day was 43.50, right, almost to the penny. We didn't get quite to the gap fill. And if we look at the NQ, it got really close. Low of the day was 14.609.25. And our the gap here was 14.566. So 50 points on the Nasdaq is nothing. Why didn't it get there? It's OPEX Friday, and everybody was waiting to buy this, right? I mean, everyone wanted to buy that gap. So a lot of time you got a lot of eyes on it, especially during an OPEX. They're gonna probably take it the other way, and that did happen. Semis did have a decent day today. That kind of led the charge there, up 62 cents. Another sector that's just been a rock star here, XLE, just holding up really well. Up 1% of the day. We'll talk about energy in a minute. But again, short term right now, I think we bounce up here. Targets, I would say backtesting this upsloping trend line. 50 MA, 20 MA downsloping now. So, right in this area, probably going to be good resistance. Also, if you look at, if we flip to a 4 hour, you can see this is kind of like where we chopped around before we broke down. So right in this area would be kind of your back test of the breakdown, essentially, right? So that's where I think the market needs to go in the short term. If you can put in now for the bull case, if you come up here and you can put in a higher low there, now things may change a little bit. Now you can go up to the gap fill. I'm not really seeing that right now. I think there's a lot of problems. Evergrande blowing up. That's just a one minor thing. It does, I've talked about this lately, but it feels like there's something big around the corner. And we're also coming into seasonality. September, October, November, those are never good months for the market. The NASDAQ was up 45% year to date at one point. It's not too much to ask for it to give 10, 15% back when you have that type of a rally. So again, that's kind of my take on it right now. Volatility did come in off the highs. Again, talk about this. I think I talked about it yesterday. I did to my members, at least. I don't remember if I said it on here, but down 3.2%, but a lot of resistance in this zone, hitting the 200 and backing off. So, now volatility, I think, is bottomed. I've gone on here before and saying it generally bottoms in August, bottomed on the 27th of July. But for now, I think you get some type of a pullback there, and obviously that should lift the market's triple Qs here. Also, again, right into this level here, pivot, gap fill, we gap down, and then we rallied back up today. We'll see if that can hold. There is some daily chart support. We did lose this trend line though, and that's confirmation really below that. So definitely a sign of weakness. We also lost this trend line obviously last week, but you're into a little chop zone, getting a little stretch to the downside here. Probably needs to check back into that 20 moving average, 50 moving average right there as well. 370 whole round number, that's probably going to be resistance. If we do head lower next week, and there isn't a low in here, you're just going to go right here, right? 350, 100 MA, trend line. What else is there? 20-week moving average. We've been talking about this since the breakout, right? So we're really extended from that 20-week moving average, needs to catch up to price. So again, there's lots of reasons here why I think we're close to a bounce if we haven't already put in the low. How about the spiders? 20-week moving average right there, okay? So you get the idea. But markets here, I'm going to keep going to the intraday. But yeah, markets here, getting a bounce today. It is OPEX. We'll leave it at that. We'll look at next week. Remember, Jackson Hole is going to be the big event, and how we trade leading up to that is going to matter a lot. Dow, via the DIA, closing fractionally higher. Where have we been looking for it to go? In the comments section, tell me. 343, right? 345, 343. We went 345 yesterday. Low of the day today, 342.68. And we closed green. That support held. That support does kind of need to hold too, because that's a weekly inverse head and shoulder on the Dow. And if you close back below that, that pattern's negated. So just be aware of that. But Dow holding that 343 area for now. Anyways, semiconductors here, again, up 0.5%, just under 0.5%. NVIDIA earnings next week. That will move the markets. Needless to say. Where is it going to go? I don't know. to give you the best answer there, I don't think anybody does. But I will say that if any of the other semiconductors earnings have been any sort of indication, Qualcomm sell-off, TSM sell-off, AMD sell-off. I don't know. It looks like NVIDIA. It looks like the AI craze has kind of run its course here. So it'll be interesting. But either way, semiconductors here, resistance still 150. We'll call it 152, 153 as well. And then obviously on the downside, there's your 100 MA, this trend line. It did hold that 145 pivot zone that we talked about. And, it closed back above this green bar. So that's a positive here in the near term. IGV, I don't like this. So this is weak. That doesn't mean it can't get a bounce. It's a little oversold here on the daily, but you guys know what it did. On the weekly, you lost that breakout bar. Inside bar pattern, that's a failure. So I'm expecting IGV to go down to the next level. There is a trend line right here. There's a 20-week moving average, 200, 100. So there's a good amount of support in this zone. And then you've got this pivot, right? So right there and right here. I'm going to get rid of this because we don't really need it. That's your last pivot high. So this is probably where it wants to go. 305 to 315. That's going to be your zone. Doesn't mean we can't bounce up first and come down. But you have a failed inside bar there on the weekly time frame, not the daily, the weekly. So that is a big negative there for IGV, and a big negative for technology as well. Dow Transports here, holding our support area 15.5 to 15.6, and reclaiming the 50 moving average on a daily close, just barely. So again, that is a positive for the markets. 1, 2, 3 bars down. Usually you're going to get a retrace after that, especially wide range bars. Where can it go? 16, obviously psychological number, and then we'll just say the 20 moving average for now. So those are going to be your kind of short-term levels there on the DJT. But we did close below, again, weekly breakout bar on a weekly closing basis. So definitely a sign of weakness. If it continues lower, it can go down, all the way down to that 20 moving average. You didn't put really any support in here on this move up, so just be aware of that. But transport's getting a bid here. We'll look for a retrace there as well. Okay, let's get over to bond yields. And we'll talk, Bitcoin taking a dump. We'll talk about that in a minute too. 2-year here, fractionally higher. Nothing terrible going on here. A little micro inside bar. That's still setting up for a move higher. Same thing with the 5-year. These are all setting up for moves higher. There's the 10-year into double top, 30-year into double top. They may have to do some backing and filling, but I think they want to have one more move up into the fall. But yeah, yields still holding up really well, and they definitely need to be respected, and that's part of what's keeping this market on edge right now. And those rate hike lag effects that we're seeing with Evergrande failure, etc. Anyways, XHB closing up today. That took a big slice yesterday, and it went into this green bar. So I think I said 78 to 78.25, if I'm not mistaken. What did we get down to yesterday or today? 78.64. Okay, fine. Well, let's get up to the 50 moving average, and we'll talk from there. Then your breakdown area is 82.50. So those are going to be the levels I'm watching on XHB. But rounded top in place. Take a look at the weekly. That's a big slice there. This continues lower, probably going to that purple trend line before it gets any sort of meaningful bounce there. ITB, same thing. 82.50. Maybe that's what I was thinking of. 82.50 on the ITB, and that's where we went there. If this heads lower, big support levels 77.50. You'll have some around $80 with that 100 MA. VNQ managing to hang on. So we talked about testing that trend line. We hit it, gap below it, and close green. So this can get up to 82. Let's call it 83 here for the near term. Then 84 is kind of your big master resistance right now. But it did come a little bit off the lows. You held that green bar on a weekly close. You do have higher lows here too. So to be fair, it's not the worst setup for putting in a bottom, but you definitely don't want to go out and make a lower low here. But it did come off the lows there, and we'll watch that. Remember, 83 for the next week or so, and then 84 potentially if it can get through that. XLF here. That's weak. So again, this has been a stronger sector of late, and that has come to an end. So XLF down just 1 penny, but guess what? You broke that green bar low on a weekly close. It's a failed inside bar. So XLF's in trouble. Preliminary, I haven't done a ton of work on it, but you got a trend line here at 33, probably 32.50 too. That's kind of where it pivoted before it reversed. So there will be some support down there, but that's a sign of weakness. Especially seeing financials in rough shape. KRE down 4 cents. This isn't like the most exact trend line, but I mean, it's like hanging on here by the skin of its teeth. This is definitely a weaker pattern than it was before, and a pretty good rollover. I mean, this is your head and shoulder neckline, right? Inverse head and shoulders. This should be able to get up to, supposedly, right? That's the idea. This should be able to get up to 55. That's why I kept saying that. If you close below that, that's failed. And it's basically closed below it. Next week will tell us a little bit more, but not good. Not good to see those banks doing that. KBE finishing green. That's in much better shape. That still has that pattern clean, intact. But again, definitely some damage done to that chart. You no longer have that tight upright pattern that you had a week ago. So financials in a little bit of trouble. XBD had a nice day today. Up 2%. They benefit from volatility. Big outside candle there. That probably goes up and tests 500. So we'll leave that there. Crude here managed to close green. Again, just doing a lot of backing and filling. I think it needs to do weekly backing and filling. Once it does that, I think crude heads up to the low 90s, but for right now, it's still just kind of stuck in this range between 77 and 84, 85. So nothing really too new to say there. XLE continues to be the powerhouse, really the champion of this market here, up 1% on the day, and this led the charge this morning. So gap down and went green immediately, and then was green really all day long. Again, energy is kind of helping keep this market afloat right now as we see distribution in big tech and semis and cloud software as well. So energy is still a powerhouse. This still can get up to 92. XOP holding up really well, still overbought, but it's trying to consolidate. It still has to get through 150. Once you do that, it's up to that double top there. And then OIH gap down and closing green here, up 1% on the day. Again, this is still a strong sector on the weekly, and I think it wants that 100 month moving average, not that far away. And there's your pivot high right there. So 370, 375 in that range. Nat gas backing off a little bit again today, still kind of coming into this zone here. Let me clean up these lines. So right into this area here, we'll see if that holds going into Monday. I think we had rigs -6 today. Inventories yesterday came in pretty much in line here, but nat gas still has these higher lows. We tested 3 a few weeks ago. We'll see if we can put in one more higher low. And if you can tack that with another higher low after hitting it again, I think it breaks, and that's where you get the squeeze. But right now, just been a very, very, very choppy trade. And, you do have the higher lows and higher highs going back to April. So that is your positive there. But, man, this has been one grind here in natural gas. And that's kind of how it plays out historically, too. So, but once it gets through these bases, that is where it can really take off. Anyways, let's get over to the dollar index here. So dollar closing at 103.42. Nothing crazy here. If you get some consolidation, again, we talked about the weekly level, 103.75. You get some daily chart consolidation like you did here. This was your previous weekly level. We put an inside bar and we broke through it. So if we can do that again, this can go up higher. But right now, it is in a weekly resistance. Why do I say that? There's your weekly red bar high. That was a breakdown bar, right? That closed below this inside bar pattern, potential inside bar. We closed below it, bear flagged, and then we went down. So that's where sellers should be sitting. So you're going to need to consolidate or pull back to get through that. And it's another reason why I think the market gets a bid here. Dollar pulls back, yields come back in, markets get a breather. But either way, dollar index, it's holding up, but it should be due for some backing and filling here. And again, we'll continue to monitor that. If anything changes, of course, I will let you know. Gold also coming in a little bit. This does get hit for OPEX very often. It's getting a little beaten down here. It almost looks kind of algorithmic. Probably is on gold there. But again, should get to 1900. There's your 200 MA where it should have some support. And then if you get through that, it's down to 1850, 1830. Silver, little inside day. We're not going to make too much out of that. You lose this pivot, it's down to 21. I do like it down there. And then platinum getting a nice pop here today. This still has one more leg lower. Not interested in it just yet. Palladium up 3.2. You guys know the drill there. Copper hammering on 370 again. This can go to 380 in the short term, but that is just a bounce for a bigger move lower, I think. Okay, Bitcoin here. So gotta eat this one. So I did like the weekly pattern, but you got that breakdown yesterday. So it is what it is. I'm going to go with this weekly pattern every time I see it. So I don't mind taking the L there. Technically, to be fair, this is not negated yet. You got to close below 26.33193 by Sunday night to fully confirm and negate this pattern. And the reason I say that is because I've seen this happen before, where you have an inside bar pattern that breaks down and then it never closes below the low, and then it takes off. But it is definitely damaged, right? I mean, let's not, I'm not going to try and say that it's not here. We had a really good slice yesterday, 29,000 down to 26 there, in a 30-minute period. And notice how they did it after hours, and they did it after the futures were closed too. So 5 to 6, the stock market and COMEX futures are closed. So there was nobody to stop this from coming down. At the same time, I have this kind of thought here, and allegedly it was SpaceX selling their position. That's kind of, I don't know, it seems a little suspect, especially given that it's an OPEX week too. just the thing in the back of my mind here is, did they just run everyone's stop before the ETF news? That's one thing I'm worried about here, and I would say worried, but concerned about. But again, big slice there, definitely serious technical damage, and needs to hold 26,331 on a weekly close to have any sort of chance here. I do think it gets some type of a bounce, but if you close below that level, this is going to go a lot lower. So just be aware of that. But Bitcoin, big slice there, and obviously that pattern is much weaker. Ether here too, breaking that trend line, clean break of that trend line as well. So again, these things might get bounces here. Can't rule that out. You do have a lot of support here. That's where it reversed, before it, started to pull back and then you reverse. So that should be support. You could get a bid. Maybe they shoot the ETF down and you get short covering, sell the rumor, buy the news. I don't know. Maybe they approve the ETF and it rallies back up. It's certainly possible. But that weekly level, you close below that, then Bitcoin's cooked. So just be aware of that. Okay, lastly, wrap up here, spiders. Again, finishing fractionally higher today. I think we get a bounce probably into the 50 moving average, 20 moving average, but I think that's a setup for selling, especially if we do that heading into the Jackson Hole Symposium. It's just the way kind of volatility events work. If you're a bull, honestly, you want us as oversold as possible going into that, and I think we're kind of oversold already, which is why I'm calling for a bounce here. But I don't think it's going to last that long, and I think we're going into the toughest seasonal period historically, and it's really not even close. So anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow or next week.